pre-2020, our annual commitments were around 60 million. Now we are at around 600 million euros. These last 5 years, the great majority of our investments were in first-time team and emerging managers. Obviously, we are the European Investment Fund, so we expect the fund to invest 2/3 of their commitment in EU. If we look at the years going from 2018 and 2023, and we look at the realized MOIC, we have around 1.8. I think it's good.
This episode is brought to you by Accelerating Impact, a non-profit that drives impact finance by running free accelerator program to support emerging impact managers. By joining them, you will get coaching, training, financial support, and access to a strong community of emerging managers. Sign up at the link in the description, and thank you to Accelerating Impact for supporting this episode. Anna, welcome to the show. I'm very excited to have you during Impact Week in Barcelona. Thank you to Norsken for having us. I guess I wanted to start with that today. You have a very unique place in the ecosystem because you're financed by Europe. What is your role in climate investing? Are you trying to catalyze new initiative? Are you trying to support the winners? What's your role?
If we think about the last 10 years, the role of the European Investment Fund was really the one of a market developer. Even more so, if we look at the last 5 years, our activity has increased massively. If you think pre-2020, our annual commitments were around 60 million. Now we are at around 600 million euros. So it has really, really increased. And if we look also at these last 5 years, the great majority of our investments were in first-time team and emerging managers. Obviously, because the market was almost inexistent 10 years ago, and so we had to invest in this type of teams. And also in the last 5 years, 70% of the teams that we supported were new relationships, meaning that were teams that we didn't support previously through predecessor funds. So we really contributed to create this market in Europe. But of course, we are still at the beginning. The market is still nascent, and we are at the beginning of the journey.
And when we say 600 million, that's purely for climate?
Yeah, climate tech, climate VC.
I hear a lot of people that say that getting money from EIF is long and it's complicated, and EIF asks for a lot of things, right? What's the process? How long does it take to get a check from you guys from the first time we meet to all the way to you invest in the fund? And would you say that you're fast enough, or would you also say that maybe because you're backed by Europe, you also have different mandates to other LPs?
Yeah, I mean, it's true that our process takes some time, and even more when we invest or when we go through the process with the first-time team and emerging teams. I mean, sometimes we are the first institutional investor, and as such, we come with a number of requirements. And also, we have to give a lot of structural inputs to this team so that the fund is investable.
And what are those requirements specifically for first-time managers?
I mean, there are some formal requirements. Obviously, we are the European Investment Fund, so we expect the fund to invest 2/3 of their commitment in EU. You need to have a certain legal setup. But then, going more into the details, of course, what is really important is that you have a team and you have a good clarity on who is gonna be responsible for the management of the fund, and you have a well-defined strategy. But back to your previous question about the process of EIF and how long does it take. So the formal process starts when you really send an application to EIF. But in reality, especially for our market, for the impact market, climate VC market, the process starts even before, because you may meet a team in a conference, or a team that has an idea about a fund but is still far from being ready to invest, to apply to EIF. And this can take months, but can take also years sometimes. But then, once you are ready to apply, there is a first screening by our team, and this process also can take a few months, from 1 month to few months, depending on how clear is the proposal itself.
What goes into that first screening? How do you identify, kind of briefly, like if you have, let's say, I don't know how many applications you have per year, but maybe that's something to start with. Like, how many do you have per year, and how do you screen for the first, I guess, stage of the investment?
So we take screening very seriously. So we go quite a bit into the details already. So we assess for sure the team, and we meet the great majority of the teams that apply. So especially in this market, we want to make sure that we meet people, because maybe the proposal may not be ready, but it may come later on in a few years. So we always meet the team. We have a call with the team, or when there is an opportunity, also in person. And so I think the most important thing is really the team again. We assess the skills of the. I mean, of course, who is part of this team? The skills. We want to make sure that there is a good complementarity of skills, and so many things need to be present in a team: technical skills, operational, and also obviously investment experience. So in this phase, we really analyze these aspects. We do a first analysis of the track record of the team, and we assess whether we on a first screening, let's say, we feel comfortable on the fact that this team potentially can run a fund. And of course, it's very important to assess the strategy. The strategy needs to be well defined. We want to make sure that it, first of all, resonates with the skills and the expertise of the team, but also that it taps into a clear market opportunity, that the team has access to the deal flow. So we already go into this level of details, and then we check the basics of the terms and the governance and so on. And then after this first step, we decide whether to move to the due diligence phase. So we discuss within our green tech team, and we decide whether to move to the next phase, that is a deeper analysis. Usually we spend a few days with the fund managers, and then it takes we basically do a deeper analysis on a lot of aspects. Then it also depends on what are the aspects. There are always aspects that need to be dig into more than others. But it's a very thorough analysis during the due diligence.
And I guess two things that you keep mentioning. On one side is the team. So I want to dive a little bit more on the team. What makes a great team to run a climate fund? On the other side, it's a governance aspect as well. Like how do you set up a proper governance for a fund? If we start with the team, uh, how many people? What type of backgrounds? Would you go for a solo GP? Like, what's the story there?
So it's a lot of good questions. I will start from the last question. So we don't usually we don't invest in solo GPs. We invest in a partnership because it's our approach. We want to invest in a team, and we find investing in one person or in a partner is too risky for us. So we want to distribute the risk over more people. The thing is that when we look at a team, there are so many things that are important. Um, of course, it's very important that there is investment experience, and I think some people think that the fact that EIF invest in first-time team or emerging manager means that we close an eye on the track record, or that we don't need too much track record or investment experience. But that's not the
Mm.
case. Of course, it's different to invest in an established manager with a proven track record. There we would have a very different track record compared to a first-time team, of course. But still, we want to get some comfort that in the team there is the ability to lead and carry this investment activity.
And
Um,
when we say track record, do you want to see the entire process from sourcing to screening to investing through supporting and exiting as well?
Ideally, we would like to see the full cycle
Mm.
investment experience. But sometimes, we have invested in teams where there was not exit experience, especially when you have managers in the impact space or in the climate VC, where the market is still nascent and you don't have so many exits. And also, it depends on the stage of the fund. If you are very early fund, what is important is that you can demonstrate that you have created the value in the company. But if you are not really involved in the exit process, and you were able to show that you have attracted later stage investor, it can still give
Mm.
a bit of comfort to the investors. But still, I would say we need substantial investment experience.
Is that across all of the people, all of the fund managers, or is that one person needs to have that, another person can be an operator, someone else can be a consultant, whatever?
Yeah, that's a good question. So we don't expect that all the partners, all the people in the team need to have this investment experience. As I was saying, we need we look at the complementarity of the team, because investment experience is a part of the things that we look at, but it's not the only one. So we look also at sectorial experience.
Mm.
So, for example, if you are a fund focused on energy, of course, we would expect that we have an expert in that field. So we need sectorial experience and, manager that are able to understand and assess the technical aspect of the proposal, and also, fund management experience, like ability to run a first institutional fund may need some expertise. So it's a lot of things that we need to look at the team, and this complementarity is not that easy
Mm-mm.
to find. For someone that wants to start a fund, finding all this complementarity is not easy. Also because then the team to needs to work together. So
Mm-mm.
you need to function together, because you will work for the next 10 or even more years. So on top of all the, skills and expertise, we also assess the dynamics within the team. We want to make sure that, that the the team works well together. There is an alignment in values, in vision, and the way they work together.
I'm curious. So you obviously reject a lot of funds per year. That's part of your role. Unfortunately, you cannot invest in every single fund that comes to you. What are some of the mistakes? What are some of the mistakes that fund managers do when approaching EIF, but also rejection reasons as to why you would say no to a fund usually?
When we reject manager, some of the managers are really surprised sometimes. Like sometimes they have also some strong reaction they didn't expect it, and that is why maybe the fact that we are a public institution, they may think that we will invest in any opportunity, but that's not definitely the case. Unfortunately we have to reject a lot of proposals also because we have limited financial resources. And the thing is that the fact that we reject once, first of all, doesn't mean that we will not invest tomorrow. Actually, I'm signing, during these days, I'm signing 2 transactions, and both of these 2 transactions are the second generation of the funds, and we rejected the first fund. But the funds at that time were not ready, but they were able to still go ahead without us with a small fund and really kind of pilot their strategy. And now they are ready to get an EIF investment. Sometimes in this market, I think, especially first-time team emerging manager, the track record is a point of rejection, quite common.
When we look at track record, do you actually go into the details of like every single company that they've
Yes.
invested in? Do you look at where they are now? Like, because do you want to see ability to invest in great companies, or do you want to see performance?
Both, I'd say. So we look company by company, and we see what was the role that you played in that investment, what achievements the companies have achieved. For us, already seeing that there were follow-on investments, or I mean, there were subsequent rounds in that company, and that there was an uplift in the valuation can give us some comfort. Or, for example, it's interesting for us to see maybe when you were an angel or were in a small fund, but you were one of the first to invest in a company, and then later on you attracted the investment by a renewed investor. Uh, so we try to really analyze the track record and go also beyond the numbers or what you see. Sometimes you don't have exit, but you can still demonstrate that you are able to invest in good companies. So we take some risk in there, um, but and yeah, we want to see some degree of performance, some sign of early performance. Um, but yeah, as I said at the beginning, it's not the same. We don't expect to have the track record of an established manager.
Well, I guess something else I want to understand from you is as a public institution, how much flexibility do you have in terms of ownership of a fund?
To give a bit of data, when we look at the size of our green tech funds, the median fund size is around 100 million. But we have invested in funds as small as 30 million. Of course, the less mature the market, of course, the fund size tend to be smaller. But now we see more and more bigger funds. In terms of ownership, the average of our green tech ownership is around 30%. So it's quite higher than probably the average of EIF. And yeah, so I mean, we have some flexibility, but yeah, this is just to give a few numbers
Mm.
and data point.
What is a good fund size for climate investment today?
Oh yeah, no, there is no answer. I mean, you cannot have a single answer because it really depends on the strategy. Um, it depends on the sector, on the business models. Of course, if you invest in growth stage or an early stage, it would be very different. If you invest in hardware or in software, it would be very different. So yeah, I wouldn't be able to give you a number. It really depends on what you want to do.
And I guess that's also part of your due diligence process, is to make sure that the fund size that they're raising is in line with the strategy.
Absolutely, yeah. Of course, every single parameter of your fund strategy, starting from the fund size, the share that you take, the size of the tickets, needs to be coherent
Mm.
and resonate well with your final mission, let's say.
Something else that you mentioned earlier is on EIF is usually a first is the first LP to commit to a fund quite often.
Mm.
It happens, not always the time, but it happens quite a lot of time. How do you build conviction when you're the first, and do you prefer to follow or to lead?
We like to be, in the first closing, let's say. We are never alone in the first closing. We always need other investors, but especially in this market, we are often the anchor investor in the fund. And the reason is that we also feel that we have a catalytic impact in the market. So once we commit, then also other investors have a bit more comfort and are able to commit later. So that is also the reason why we have also this role in the market. As I said, when we invest 30% in a fund, it means that very often we are one of the biggest investor or the biggest investor. We would like to decrease we would like to decrease the reliance of the manager on us with time. So the idea is that they will be able to find more and more private and other investors in the following generation. But if we don't talk about leading or following in
Mm.
fund investing, but yeah, I mean, we at the moment we are the one of the biggest LP in the fund in the funds that we invest.
Yeah. I know we don't talk with that language, but equally, I
Yeah.
feel like sometimes it is really a game of leading and following. As you said, I think once EAF says, okay, we're in and we want to invest 30% sometime of the fund, then other people look at it and they're like, okay, if they're willing to put 30%, they must be confident. So we might also want to invest, right? So
Mm,
that's why I see you guys as sometimes leaders and opening
yeah.
opportunities for others. Um, it's interesting what you said on trying to have fund managers rely less on you as they do more vintages and as they advance through that journey. Um, do you think you take more risks than other LPs to that extent? Because it's basically you help someone with the riskiest product they have, which is their first fund, and then as soon as they know what they're doing, you basically say, okay, we will invest less and let other people come in. So, do you think you take more risks than other people?
It's a good question. I mean, I think that when you invest in first-time teams, you take a bigger risk compared to when you invest in established teams. And I believe that compared to smaller funds or also family offices, other type of investors, we, thanks also to the experience that and expertise that we have, we are able to still do a very deep due
Mm.
diligence before investing that allows to get some comfort on the investment we make. Of course, we are contributing to build an ecosystem, and there will be some good investment and some bad investments for sure, because that is part of the process. But yeah, to your question, I think there is a good level of risk that we take when we invest in these teams.
Well, talking about risk, we will also talk about performance. You actually are one of the LPs in Europe, and not specifically you and your team, but more broadly EIFs that invest across so many different vertical, horizontal. I don't know what climate is these days, but do you think climate underperforms versus other assets
Mm.
in VC, or do you think it's actually maybe performing better?
I mean, first of all, I think doing that comparison is wrong to start with. And the reason is that you cannot compare a strategy that has so few years of life compared to some other asset class that have been there for decades, right? So I think that is the starting point, right? As I said, we have really, if you again, to give some number, like in the last 5 years or so, we have invested probably in 60 more funds. The total funds in our portfolio is 90. So it means that this strategy is very recent, and this market is very recent. So there is still some time, to allow this market or these strategies to show that it works. But I want to also say and give some numbers, because I was looking at it before starting this conversation. If we look at the years going from 2018 and 2023, and we look at the realized MOIC, we have around 1.8. I think it's good. It's very good, because the market is nascent, and also we don't have so many exit compared to the tech
Mm-mm.
VC. So um, of course this MOIC is lower than all the tech VC, but I mean they have been there for more time, so they started investing even earlier. So I think that this is our data that are positive, that are showing that we can that these managers can have proceeds, that can have realizations, but we are still at the beginning. We have to understand also that these funds that we have invested in the last few years, many of them have invested in hardware models, in deep tech. So it will take some time before they realize. And I think it's now in the next few years,
Mm-mm.
where we will see really the realizations. And it will be really time to show
Mm-mm.
everyone that these type of strategies work.
Yeah, and also, I mean, in your selection of funds that you said it goes towards 2023,
Yeah,
right? Like you wouldn't expect a fund from 2023 to already give back money to LPs by 2025. I mean, it's only 2 years, so in order to deploy and get back money, you
yeah.
would expect a bit longer.
Yeah, I meant all the when I said from 2018 2023, I really refer to the um, realized MOOC that was,
Mm.
let's say, produced in a
Yeah.
way during this year. I have to say that if we take also into account 2024, probably the data are worse. I mean, they are worse because 2024, especially the last part of the year, was a difficult year with a lot of write-off, and it's a very difficult moment now for the fundraising in general. But I think the message is that we have early sign of performance
Yeah.
and of realizations, but more to come.
For sure. What's your target performance range once you invest in a fund? What are you looking for?
No, we don't have a target. We really believe in the correlation between impact and financial performance. But then we look at every different strategy, and we make sure that there is the ability to generate a substantial return, but based on the strategy, the market, we have some flexibility.
That makes sense. I guess just coming back to the point that we had earlier on performance, how long are you willing to wait before seeing any performance from a fund that you've invested in? Like, how soon do you want to see some MOIC back,
Mhm.
basically?
It's a good question. I'd say that mm, after the first, so let's say that we invest in the first fund. Then after 5 years of investment periods, then you come back and for raising the second fund. Usually at generation number 2, it's difficult to see already realizations. So I'd say that the standard rule is that at generation 3, we expect to
Mm.
see some realizations, which doesn't mean that you have already returned the whole fund or that you have a crazy DPI, but it means that you already show that you are able to return money to the LP. So by the third generation, we would expect a bit more of comfort on that point.
And will we see you reinvest in a lot of the first funds?
Yes, I mean, I don't want to say that we take a blind approach and we always invest in the teams that we have invested previously. But our experience is that we still play an important role in the subsequent vintage years. I mean, the subsequent fund generations. So yeah, I mean, we do re-ups, so we
Mm.
invest in teams that we have previously backed.
Well, I mean that's a good sign. I mean, it means that the funds are performing, at least to some extent, because otherwise you would not do that.
Yeah, but yeah, it's not we don't invest in all of them.
Of course.
I don't have a percentage, but yeah, I mean, we do that when we are comfortable.
I guess to switch a little bit topics there, but you invest in impact funds. Do you want funds to have an impact carried, so impact linked to their carried? Is that a requirement for you?
I wouldn't say it's a requirement. I mean, in the sense that we don't want to impose
Mm.
things to the fund manager if they are not comfortable with it. But in fact, yeah, the majority of our, I mean, actually, 100% of our green tech VCs have a percentage of the carry linked to the achievement of the impact KPIs. And we believe that it's something that resonate well with the strategy and their vision, their mission. So usually we don't have a tough conversation on this topic because yeah, I mean it's not a hurdle or it doesn't hinder any performance in reality. So yeah, we request the manager to have some part of the carry linked to the impact KPIs.
I have maybe a contrarian point of view on that, but
Mm.
I sometimes wonder, why don't we do that for the typical tech funds, and why do we do it for the guys that are already trying to do good, right? Like sometimes because it's I wouldn't say it's a constraint, but it pushes people in a certain direction. While we certainly don't do that for the people that are just doing regular tech investments. Do you think we should give some of like an impact carry to those people to help them move towards better companies?
Hmm. No, I understand where you are coming from, but I mean, as I said, the having the impact carry methodology doesn't add an
Mm.
obstacle to the manager, to the activity of the manager. Is not sort of it's not an obstacle for the activities. I mean, it's really what we want to make sure is really that there is some accountability for the impact that
Mm.
you are saying that you will create. And I mean, and the impact methodology is flexible enough so that you can really kind of customize it on a way that best fit your companies and your portfolio companies and your strategy. So I don't agree on the fact that we are putting another another obstacle and so on. I think that if you are a climate tech fund or an impact fund, you have to be somehow accountable
Mhm.
for the impact that you create in the society.
And what's your way of monitoring impact throughout the life of a fund?
So doing a bit of a step back. So our methodology works that for each company that the fund invests needs to have one or more impact KPIs.
Mhm.
And at the moment of the investment, the fund manager, together with the companies, set some target for these impact KPIs. These impact KPIs are presented to the advisory board, so the LP advisory boards, and the LPs or the advisory board members approve this impact target, and then there is a reporting, an annual reporting through which we basically monitor these impact KPIs. There is the majority of our funds have impact reports, and so in the different interaction that we have with the fund manager during the life of the fund, we discuss and we look at these impact KPIs.
Makes sense. Well, look, we're getting toward the end of this conversation, but maybe you sit in a well, you're definitely part of an LP that gets to see the future before it happens. You know, I kind of sometimes think that GPs see the future through startups, but LPs also do that through GPs. What's the future for climate
Mhm.
investing? Because it's I hear a lot of noise around climate investing these days. Is it going to continue? Is it going to have a new label? Do we care if it has a new label? What are you looking at right now for the next few years?
Yeah. I mean, of course, I don't have a crystal ball, but I feel comfortable saying that sustainability, the climate transition, the green transition will stay high in the priorities of the European Union, and as such, there will be investments in our activities on this market because it's such an important priority in the agenda of EU, that for sure there will be space in our activities. Um, Also, the EIB, so European Investment Fund is part of the EIB group, is the climate bank of Europe. Has worked on the last 5 years on a climate roadmap to achieve the objective of the European Green Deal, and we expect to have more activities following these frameworks and the activities that were carried over in the last few years. So I think we will continue to support this market, to contribute to make this market grow. And I mean, we'll see what the names. I think it doesn't really matter, but it's important that we contribute to the green transition.
And one last question for you: are there any trends or strategies that you look at very closely today? Like, are there emerging strategies that you see happening that interest you?
Mhm. As I said throughout our conversation, the market is very nascent, and so we really need to do more everywhere. I would say at each stage, each sector, each geography as well. Um, I think what we are in we see in the portfolio that we have a lot of the majority, I would say, of our portfolio is generalist environmental impact funds and climate tech funds. So quite a broad
Mhm.
type of strategy. And a lot of mitigation also strategy. We would like, we expect to see more adaptation strategy. I
Mm.
think there is more and more awareness, especially with everything that is happening in also Europe now. I think
Yes.
then people will realize, no, that we need more solutions. I think what's also is a priority for us is growth funds, because I don't want to say that we have enough early stage funds, because we need more as well there. But I think, yeah, there are not enough for sure growth funds, in the sense that, in order to really scale technologies, we will need more growth
Mm-mm.
investors. So yeah, we are doing more investment on this, and we would like to do more. I think another probably third trend, and that I think it's very interesting is, and we will see how things will go in the future, is the collaboration and the partnership between equity investments and other type of
Mm.
instruments. I think this climate game cannot be played by equity investors by themselves. We would need more debt, grant, or also tailored financing instrument. So I would expect to see more in that sense. So I would say these are the three
Mm.
things we
S-
are looking at.
So maybe more specialists, maybe more adaptation, more growth, and more blended finance.
Yeah, in more instruments, yes.
For sure. Okay, very interesting. Well, look, it has been a pleasure for me. I do have a few questions before we leave. The first question is, where can we find you online if people, fund managers listening to this, they want to reach out? What's the best way?
Yeah. So of course you can reach out to me, but and the rest of our team. We are responsive, and we are always we are attending conferences. We try to be present. Like today, we are at the Norscan Impact Week. So feel free to, when we are there, if you want to chat, also informally, please feel free to approach us. Then there is the more formal way. You can go to the EIF website, and you can put, submit your application, and you can be sure that someone of our
Mhm.
team will reach out.
Sounds good. One last question for you today. If I were to interview only one other LP, who should that be?
Oh no, I cannot.
Okay, well, you can say a couple if you want.
Oh yeah, I didn't expect this question. I think I I know I'm not really original, but I think the activity of BPI in the VC market in the last year is remarkable. And I mean, France is today one of the biggest market in our portfolio. I think there is first Germany.
Mhm.
So I think it's interesting to also get their perspective on how they build this market.
So
Um,
BPI and KfW in Germany?
yes, exactly.
Mhm.
I think, yeah, these are our fellow public LPs. And I think it's interesting to hear it from their perspective.
Sounds good. Well, it has been a pleasure. Learned a lot from you today. Thank you so much for taking the time, specifically during Impact Week. I loved it. Listeners, if you like this episode and if you like the show, don't forget to like, comment, and subscribe if you're on YouTube, or to give us a follow and a 5-star review on Apple Podcasts. It really helps us get people like Anna on the show. So thank you so much for today. And yeah, I'll let you go.
Thanks a lot. It was a pleasure.